So, this is just me shooting my thoughts out a little. Okay, so today we are down, let's see, it's 350 right now, and we're down 152 points on the Dow Jones. We're down nearly 17 on the S&P, and the NASDAQ is the weakest of the indices, down about 1.5%. Okay, so jumping to my Elliott wave analysis, I have in place a, let's see, is that the right chart? Maybe that's the right chart. Or maybe this is the right chart. Okay, yeah. I have in place, this is a Fibonacci time series, I have a major pivot set for tomorrow. Okay, so major pivot set for tomorrow, and that's going to decide the direction of the market. At this point, I'm seeing a lot of divergences, especially between this this relative strength index and this momentum index. As you see, the relative strength index has been declining, and pretty strongly, while the relative strength, while the momentum index, and while it's not as steep, has actually been rising. And see if I can grab a trend line for that. Nope, looks like it doesn't. The computer doesn't want let me do a trend line, but as you see, it's slowly rising. Each bottom is getting higher. So that makes me a little bullish. Next, we'll get rid of these studies again. As we see, everything's just sitting below the 200-day moving average. We have a triangle right here, and it gives us an upside target of about 1336 on the S&P 500. Projected from the breakout point, never mind, about 1350 if you start the measuring there. If you start the measuring here, it's about 1336. So we have a range, an upward range, and on the downside, we have a maximum target around 1150 on the S&P. I still think the breakout's going to be up right now. According to my Elliott wave analysis, we're still in a wave 3 primary, and this entire consolidation period, no matter what the analysis would say at this point, it's due to break out upward. So if only this upswing was a wave 3 primary, and this was actually wave 4, we're still due for one more upswing. And if this is a wave 3 primary, and this is an extension, that means that we're due for an even larger upswing. So according to Elliott wave analysis, we're not going to break out to the downside. We're going to break out to the upside. Now, that being said, I did, just for a pretty much complete gamble, I did buy a couple DIA call options. So I am, they were cheap options, so they low probability of actually making money on them, but I did buy them. And I'm expecting the next 2 days, especially with that pivot day on the 17th, I'm especially expecting that to improve a bit. Now, as far as patterns go, inverted hammer, and once again, that's just pretty much a long candle. Okay, so going to the Bolkowski studies, before downward breakouts, he gave us the top 15 candles that happened before a downward breakout. Inverted hammer is not even on the list. So low probability, let's see. He has about, let's say, 5,000 patterns here, and that means that less than 105 were inverted hammers before breaking downward. So that means there's like 2% of the patterns before a downward breakout, and that's just being optimistic, would be an inverted hammer. So I'm alright with this. No problem at this point. I'm alright. Okay, so just thought you'd like to hear that, and we'll see if I'm right tomorrow. Like I said, major pivot day tomorrow. and that's either going to be the end of a downward move or the beginning of a strong move, most likely upward.